Good morning, everyone. It is Thursday. It is post-FOMC day. I'm your host, Market Stoker D. This is the Eurotrade. And if we're meeting for the first time, I've been trading for 18 years, specializing in some of the more unusual products that you don't see very well represented. So I'm a commodities trader, not much of an equities trader, and I like to trade copper, natural gas, RBOB, and yes, sometimes crude oil, although less so this morning. So let's have a look at what FOMC has brought us, right? So from the daily chart on copper, a lot of spikes, but we did make a little higher high here on the daily chart. I'm still a little bit long biased on copper. Oh yeah, before we go on, make sure to familiarize yourself with the risk disclaimer that Bruno posted, because although I am Series 3 qualified, I'm not a CTA, so everything you see today is for educational purposes only. But yeah, higher high on the daily puts me slightly long biased. That 4-hour demand that we had a while back, a couple of days ago, it held. So now that is the reference point for buyers taking control, and prices for now are staying away from that area, which is very, very good. When it comes to the intraday time frame, we had the overnight high created at 523.40. That happened literally right as Globex started, like maybe about an hour into it. And then Asia brought it all the way down. The overnight low is actually all the way down to the put wall. So there is confluence around 515. And in fact, we don't need two markers here because this is one and the same. So let's put this like that. And overnight high going into the COMEX value from yesterday, but during Asia failing to rotate further. I do use COMEX value area for reference because COMEX has the most volume out of most things traded, and therefore that is what we want to be basing our distribution curves from the regular trading hours on. So if we ever get down to 515, that would be more of a start setup for me, especially if it goes slightly below it and then creates those exhaustion volume bars, comes back in, and then starts reversing. That would be a very, very good setup. But failing that, because we can't always expect that prices are going to give us the A-star setup every single day, so I need to have 2 or 3 more hypos to make sure that I'm prepared. So the second option would be that we go into a value acceptance special situation play. That would call for the market to go above the initial bounce high yet again. So we tried it once. COMEX value low was reactive. We do have GEX1 just at 520. And GEX1 in certain situations can be, more often than not, an accelerator level. So let me just have a look at something else here. Find copper, find copper, find copper. Where's copper? There it is. Okay. Yeah, so we are still in positive gamma, I would say. As long as we kind of stay in and around sort of 515, 516 area, I would say that we're still in positive gamma. But even so, GEX1 as a level, especially when structurally it's kind of towards the bottom of the swings, intraday, it tends to be more of an accelerator than anything else. If GEX1 was like all the way up here, then I would be like, well, maybe, maybe we can kind of fade it from there. But with the structure, 520 is pretty close. So I would be expecting these guys here that were buying in this wick to try and push things higher. Now, obviously, it's very early. We don't have that much volume. Look at the difference between this is already COMEX and London. So volume is definitely required to make sure that we're doing trades that have enough juice, enough momentum to push us to where we want to get to. So value acceptance upside would be more conducive to the larger time frame picture where we made a new higher high. And yes, at the first try we failed, but we still have that low volume area hanging over us at 529. If I can remind you, on the weekly chart, this is what we're working on. And if we go back to yesterday and not take this one into account, this would be even thinner. And yet here we still have low volume areas aplenty. So from a very sort of bird's eye view, longs on pullbacks is what I want, but also longs in case of value acceptances are also acceptable. So that would be something I'll be scanning for on copper. Now, natural gas tends to be increasing in demand around about this year, but so far we're not really seeing that. So let's move on to natural gas. These two products have been what I've been trading recently. These are yesterday's levels, so we need to kind of start everything again. We left a rollover gap. So we rolled into December, and now we have this. Is it going to get closed? I don't know. Sometimes rollover gaps are not necessarily closed, especially not at the time of the year where there is a demand increase, potentially. And I know that in the Midwest, there's supposed to be like a storm or something towards the end of this week. So maybe that will push it higher, but I remain a little bit bullish on natural gas, even though right now it's still, you know, trying to decide where it wants to go. So from an intraday perspective, let's have a look at what we have. So this was GEX 3 yesterday. It is GEX 4. So they are weakening in open interest. But it is the same price. Then we have, oh, this is not great. So we have a gamma flip area at 380. That was a stronger level yesterday, but today it's a kind of a line in the sand for what sort of conditions we have. Let's put that. I don't really enjoy trading around gamma flip levels because it's all just a little bit meh. Because it means they're trying to decide what they need to do there. And then if the gamma flip happens too late in the day, it doesn't really have much of an effect either. So just adds to unclear analysis. Now I need to find natural gas on my other platform. Okay. COMEX value high, sorry, NYMEX value high and low is 385 is your value high. 380 is your value low. So basically the same two levels. That's interesting. So far we're inside of it. Again, way too early for this particular product. And yeah, we'll just wait and see what happens. Somewhat of a nice space towards the upside, but I wouldn't say we have oodles of space. So we have ADR high at 391, and then ADR low all the way down at 372. So we have enough space on both sides. That's not too much help at the moment. Let's see whether a 4-hour chart can give us some clues. All right, so 4-hour chart has a strong bullish engulfing. If that starts to grow in volume, that is actually one of the interesting parts here. because look at what happens when there is a bullish engulfing. So 4 hours chart is a really, really strong, decently intraday, a decently large intraday time frame that you do need to track. So one of my charts on the other screen, I always have a 4-hour chart there. So you can have these beautiful runs, especially if they're coming out from some sort of a consolidation. And this one was weaker. Why? Because we have a selling wick, and the selling wick is about a third of the composition of the entire candle length. That's not really what you want to see. You want to see nice strong closes on those large time frames. Otherwise it's all a bit iffy. But yeah, a little bit bullish on natural gas as well, as long as we can get above GEX4 and get some commitment above that. This was yesterday's session high. So that could be a further orientation point once we take that out. Are we holding above it, or are we very quickly reversing? All right, so Menzo says, could you review my stats? Super curious to hear your thoughts. Yeah, why don't we do a bit of stat chat? That could be something to share. They're not really opening. Okay, here we go. All right, here are your stats. Let's have a look at how much, is that the only month? Yeah, okay, so, 3 weeks, decent sample size. Let's have a look. I like that your losses are smaller than your winners. So that's what really you want to see. And they're almost like 2 to 1 in favor of the winners, right? From that daily perspective, you're already knocking on 1.8, 1.9 R, just overall from the day-to-day perspective. That is smashing, right? That's what you want to see. So really like that right on the first view. Trade win percentage and profit factor. So this is okay. It's okay, but this combination of the numbers will make things a little slower from the profit perspective side. Why? Because at 1-to-1, at 56%, you are sort of break even, right? Well, you're profitable, but it's going to be slow. Now, this is similar. So you have 50% and a slightly higher profit factor at 1.3. It's borderline stable, but I would like to see that even more stable. Now, I don't know what sort of a risk reward you shoot for, but in order to make this more stable, rather than me saying, oh yeah, why don't you just get more accuracy? Because that's actually the more difficult part, to get more accurate. But if you already have a good setup, maybe try and push this to at least 1.7 on the trade to trade perspective, right? Why? Because at 50%, at 50% accuracy, 1.25 is sort of like the break-even point, right? So you're doing fine. You're over into the profitable territory, but I would just like to see that a little bit more stable. And the easiest way to do that is once you have a trade, I'm assuming that the trades that you take don't necessarily all just reverse as soon as you take them off the table, right? So there will be plenty of them that will be still running after you close the trade. So from that perspective, I would like to see you maybe shoot for a slightly higher profit factor, not like super high R, like we're not going from 1.3 to like suddenly 10, right? I'm just talking like 1.5, 1.7, and then that will still maintain the trade win percentage at 50%, which is excellent. but it will make your whole system a little bit more stable and over time accumulate more profits a little bit faster. But apart from that, I do like this. I like to see that there were some losses there, but you kept them really contained. So I love that. This is what you want to see. Not every day will be a winner, but you are perfectly able to keep control of yourself. Now, the number of trades is also fairly consistent. I mean, it's a bit too many trades for my liking, but that's me. We're not the same. Obviously, I prefer to do, 1 to 5 trades per day. But obviously, you're doing something where you're seeing the market fairly well on most days, and on your losing days, you're not losing the plot, right? It's still ballpark around 20 trades per day, right? So overall, this is pretty good. I really love this. The only thing that, like I said, would help it is just to increase that risk reward into slightly more stable territory, just a little bit more. But outside of that, great work. This is what you want. This is something that's scalable, and that's what you want to see. So well done. Good job. Right. Let me actually have a look at chat because I haven't done it. Who is in chat? Let's have a look. Oh, grand risings and prosperity. Yes, live long and prosper. So Dan Trader is here. Oh, Dan Trader, I haven't seen you. Have you been around? I don't know. Maybe I haven't been in chat enough. Are streams starting from now on? No, so not yet. This is just for this week because we over in the UK we changed to the winter time, so we changed the clocks in a week earlier than the USA. So on Sunday, you guys will be changing clocks too. So we go back in sync, and then we're going to be at 3:30 a.m. as usual. However, at some point, once we get things all sorted and ready, there will be a rebrand of this show to be more metals focused. And rather than calling it Eurotrade, we're going to call it something else. And then it's going to run closer to the LME Open. So that means it's going to be starting at 5 a.m. Central rather than 3:30 a.m. Central. But I don't know when, so don't ask. We tried to change it a few weeks ago, and then there was some like legal things that we had to take care of first when it came to like assets and stuff. Anyways, let's have a look. My sister is in chat, so good morning, very good to see you. Tom is saying, T3 is saying, who got that GC rip? Nope, not me. I will not be trading gold this early. You know me. Because a rip then turns into a dip. And this whole move down is 162 ticks. And now it's going to wick it back up. And then it's not going to go anywhere. And then we're in trouble. So GC to me has just gotten into territory where it's very difficult to control risk on candles that are spanning 160, 200 ticks. So I'm staying away from it, intraday especially. If it ever comes down, so I look at the C-vol on CME. Let's just have a look at what that is. And usually I like trading gold when it's around 22. That tends to be a pretty good one. And right now, gold is at 25. So it's getting a little less crazy because last week it was like 30. That was insane. But yeah, 25 still a little too high. 20 to 22, that would be okay. But yeah. So we can focus on copper. I love copper when it gets a little bit more into the volatility, but it still maintains its smoothness and the smooth character that I know and love. Right, natural gas is touching VWAP here as well, but it is rejecting. Just tracking what's happening. It's rejecting X4 as well. Now, copper. Also going a little bit long from VWAP. So we didn't quite touch X3 since we started London. So, but still, maybe there's a bit of a scalp opportunity here. Let me zoom in. Let me zoom in. So we have a high time frame picture, 30 minutes. We know where the initial bounce high and low. We know where VWAP is. We can see volumes. We can see ranges, everything. And now we're just looking for a bit more magnifying lens. That's all we're doing here. Do I have Bookmap open? I do. Okay, that's nice. By the way, I did record the Bookmap, just a very short Bookmap video on my settings. Need to edit that, and then I'm going to check it up on YouTube at some point, and it's going to be on my YouTube channel, Market Stalkers. I didn't do another coffee because felt like I smashed down a double espresso because I went to bed late last night. It was a very long day. Okay, so one of the things that I want to see on Bookmap before I get involved is that these bubbles go into these green bubbles. So I like to have conviction with the active market participants to my side. So if they still look like this, so it's all red, it's all on the ask. And until that changes, I don't really want to get in. We have negative delta by minus 700. That's also not that great. Belongs just yet, but we'll see whether it changes. We've just had the first sort of bigger volume that on a 2-minute chart that went over the volume moving average. And I just need to ensure that we are actually getting some people coming in, because they definitely tried, and the negative delta is falling. You can see it falling down like that. So it's come from sort of minus whatever this was, minus 500 down to minus 700. So that needs to get shaved off a bit. And remember, the main core setup here that I want to do is front running the value acceptance. And if I don't manage to see anything that's, very obvious, then I might not even get involved until we actually get into the value low. But I thought maybe we can look for a little scalp up to that point. But that is a guess. I'm doing that purely because of tradertainment, right? To sort of front run a trade so that we can have something to look at. And to maybe illustrate how I would do it at the right time of day, so slightly later on. But obviously everything is still very slow, and I'm still getting candles that are not, so bubbles that are not really flipping sentiment just yet. But we do have some orders up at 520. So if you look here, they're not massive. I would like to see them at least in like 30 or 40. And this is 11, 8, 6. So some people are looking at this 520 area, which is GEX1, to maybe hunt some liquidity up there. But for now, they're not exactly engaging, so I'm going to wait and stay out. Okay. Murtic Trade says, I haven't watched in a while and gotta say overall quality is top notch. Well, thank you. The GC long trade by Arrow Trades was excellent, really paused exactly at FOMC high. Yeah, so big volume candles, right? Big volume candles. So if we look at what happened during FOMC yesterday, so let's just find that. It was 6, wasn't it? Yeah, so here it goes. So this is the biggest volume candle when he started talking. Not Aaron, I mean Powell. So what you can, so this is something that I used to do with inventories report on crude oil. You would mark off kind of a high and a low of the biggest volume candle, and then you would use that for orientation, because that is how support and resistance is created, really, right? So if you can implement that, and there are indicators out there that look at the candle volume delta inside the candle, and those areas tend to be pretty accurate. There are a couple of ways to use them. If you're outside of them, you can use them for the price to sort of touch the area and then move in the same direction away from them. Or you can even get the situation of a version of a range trade, I suppose, where you're still inside it and then they tag the top of it, but we can't go any higher, and it just starts to rotate back into that whole structure. So that's another thing to look out for. And if you're looking for a more momentum trade, like let's say during Asia, you were trading this, and then you're looking for a return, and all of this to be basically like a liquidity grab underneath that area. Once we started tracking back inside it, you could have attached a VWAP on, you know, any time frame. I mean, I actually prefer 15-minute time frames for the purposes of looking at support and resistances intraday, but I know that Coach Jay will go even more granular, like super granular, down to look for a 3-minute candle if we are trading regular trading hours and he's watching it, right? So he will be able to find quicker trades that way. But once we're dealing with something that happened the previous day, I like to use a 15-minute chart for that purpose, especially if the candle is too big. So some people try and catch these big candles as they're getting created. I don't like doing that. Whenever I see a big candle, I just go, ooh, excellent, further reference, right? Now we have a high and a low. It's amazing. So I don't get FOMO when things are happening. I just use it as even more data. And then sometimes when you've had, for example, a P-shaped day, which is typically shorts liquidating on an institutional level, those days can create very big moves. And then sometimes you can use, let's say, a 15-minute time frame with the highest volume to actually get some new levels as the day goes on. So that's a very good way to look at it. But let's get back to our copper trade. Now, what did copper do? Well, yesterday for FOMC, we did have a candle, but I mean, copper sometimes completely ignores what's going on with FOMC, and they're just like, yeah, whatever, mate. All right, so we're gonna have the second volume. Let's make a punt here. Should we do a punt? Okay, I don't like this stop here. I want it a little bit lower. So I'm going to increase this to ballpark about, what's that, 50 ticks, or thereabouts. So we'll see if we can get above the value low on this run up. But again, we might get up there and then lackluster, and then LME comes in, and then they might start pushing it. But they will probably want to hunt a little bit lower before they go higher again. So yeah, so this is not going to be a massive trade. It's just going to be, you know, hunting whatever we can get out of this. We hunt. Arrow. Where's my arrow and a bow? What is this? Oblivion. Or Skyrim. Those are video games, by the way. Yeah. All right, let's have a look. Microlude said, just made 7K 30 minutes ago on my demo thing. Yeah, does that matter? I mean, if I tell you, well, you know, made 1.5 million on the demo, does it matter? It does not. So yeah. Bashir says, just 2 days in the XFA, can I share my stats? Well, I would prefer if you would actually have about 2 or 3 weeks worth. What can we glean from a 2-day sample size, one of which was an outlier day yesterday on FOMC? Not much. So I don't like to do reviews from a 2-day sample size, but if you hold on to that for 2 weeks, let's say 2 weeks minimum, then let's have a look at your stats, because that's going to be more value to you than me kind of going, oh, you did very good over 2 days, but one of which was a day that generally has quite a bit of momentum, and it's nowhere near a normal day. So let's pause that, and then, like I said, try to, so give yourself a challenge that you are not going to lose this XFA, and that you want to generate stats for 2 weeks, and then we can see where we are. Okay, is that a deal? Is that a 22 ATR? No, it's a 9 ATR. Dan Trader says, great, I know I'll be able to understand your Bookmap video. You're a great explainer and very detailed. Yeah, it's not going to be it's not going to be too long. So I'm not, like Bookmap, the way I use it, there's not too many, like I think there's like 4 or 5 things to watch out. And I did cover all of that. I think it's pretty simple, right, to understand. So I haven't rewatched it, but if if I'm editing today and I feel that it's not really explaining, I will do it again, right? But I think it's pretty clear, you know. I think it's pretty clear. Anyways, you guys will let me know as usual, right? Someone is complaining about my volume level, dude. I am hitting like quite a like -15 to -12 decibels. That is more than loud enough for speech. So I don't know, and my mic is like all the way up. So yeah, maybe your audio. Short gold, anyone? Hell no. Michael says, I'd say we have 3 good signal. 3 good signals? 3 good signal? I don't know. I think there was a consistent downtrend for the last 12 hours or so. There's a major reversal. Starting to see highs being hit. Yeah, me too. That's why I'm in this. But I'm trading outside of the hours that I know that I have a huge edge here. So this is not the time that I would normally trade copper. I would trade DAX. If we ever get it. But yeah. Dan Trader says, Chairwoman D says a nice ring to it. Oh God, no. Hell no. I'm not much for politics. I'm not much for, like, look, I do run companies, but that is as far as I will go. If I wanted to be a chairwoman, I probably should have started earlier. I don't know how they feel, how anyone really feels about former musicians deciding to step into some more serious waters. And yeah, so me with my comedy channel on YouTube, and it's not really a comedy as in like, oh yeah, it's all just nonsense. My own YouTube channel always had the idea of bringing serious topics with comedy twists, like comedy relief moments. And I'm actually coming up with something in the near future, because I do live streaming here already, so I don't want to do yet more live streaming because this is a lot, right? This whole you from your perspective, it's like, oh yeah, you just put it on a camera and you talk into it. There is a whole bunch of stuff that goes into this. If you want to make something pretty high quality, you cannot just wing it. You have to have some sort of a concept, and then it's a commitment to obviously show up every day and have something ready for you. And you won't always have trades. So sometimes when you are in a situation where you're trying to do a live stream but nothing's happening, then you actually have to be pretty communicative, because otherwise what would we have? Me just sitting here and going, there's no center. Like looking at me twirling in my chair, so you have to have the banter, you have to have something to talk about. And trust me, it's weird when you first start, because you're effectively talking to yourself in the in the middle of the room, especially in the beginning. I remember when I did my first like couple of streams, I only had like maybe like 7 people in there, and even that felt like I was talking to a wall. And I remember going live for the first time, I was all nervous, and I'm somebody who's very good with public speaking and with being on stage and doing interviews, and it's never really fazed me. But boy, oh boy, yeah, clicking that go live button and then just suddenly not having many people to talk to, or anyone in some cases, because you're like, oh, hello, is there anyone here? And then for the first 2 minutes, there's no one in there because nobody even knows you're streaming. And then, a couple of people get, and you're like, oh my God, okay, people are here. Obviously, it's a bit different now, so many years later. But now, you have people who are here all the time, and I feel like I know a lot of you as well. And chat sort of takes on almost like a personality. And it's much easier, but you're still, at the end of the day, talking to yourself in a room. Like a right lunatic. Tori Morris says, Dee, did you try trading boxes? If you used your levels and your volume analysis, your boxes will be perfect. I don't know what trading boxes means. You mean supply and demand, or do you mean volume boxes? Do you mean, like, is that a new concept? Because look, I know a lot, but there are a ton of strategies out there. So can you elaborate, Tori? And they also go, I like your style. Didn't mean your glasses for trading as well. That's funny. And after combining it with my simple boxes, I was able to be more accurate when I see them on the chart, and it is rewarding. That is great. I loved hearing that. This is amazing. See, a knowledge not shared is a knowledge lost, right? So this is a lot of us, the reasons why we do this is because it's lonely. It's lonely. And then once you explain to people how you trade, then they kind of pick apart bits that they resonate with. And then they come to you and they go, hey, yeah, this has helped me. That's invaluable. Like, there's no greater reward than just hearing that you've helped someone with something. That is really, really nice to hear. Murtik says probably the same they feel about actors, and there are a lot of them. Yeah, yeah, yeah. Oh my God, guys, you're being funny today. I think most of us would watch you twirl in your chair. There isn't need for just keep the charts up. Yeah, that would be a rather unique thing. Just the twirling in her chair. But you know what would happen? Somebody would then be like, "Show us your." Yeah. So then I would get annoyed, then I would get angry, then I would explode, and then it wouldn't be a stream about Dee twirling in her chair looking pretty. It would be Dee popping off a chat and having another rant. What are you trading? What is the HGZ? It is copper. It is one of the metals that are very important for overall inflation in economy in general. And it's slower but smoother. And it still offers about 200 to 300 ticks per day. So that is my choice of a metal or product. I've always been a commodities trader. Yes, I trade DAX. And yes, I've watched ES for bloody 10 years now. So I know it well, but it's just not as interesting to me. DAX is okay in the morning. But DAX is more difficult to figure out in the morning because it's not just, oh yeah, buy it. You have these Asia highs that frequently get taken out, and then you have a very fierce move to the opposite side. Doesn't really last too long, but it is there as a setup, and this is one of the reasons why I initially, when we started this last year in July, wanted to run these streams at this time. As you guys know, then DAX never came. I found copper to move pretty well during this time of day. But I will be honest, up until I started doing these streams, I didn't trade much copper at this time of day. And I will still say it's not my favorite. And I will still say that my highest star setups, like highest odds setups, still come at the same time that I used to trade them, which is between 12 p.m. and 4 p.m. my time. And that's not until another, 2 hours. Dan Trey says, yeah, they will criticize the type of chair you use. Always something. Yeah. Tori says the box system is very old and simple. Okay. Box around the cursor. Oh, yeah, that's the supply and demand. That's my primary thing of looking at things. But I don't like using supply and demand in that way on low time frames because highs and lows, they don't hold, whereas they hold on large time frames. So let me think. What has had a decent, because something that's like in a permanent uptrend is not a good example of it. Maybe RBOB. Let's have a look. And I will point out the differences there. Okay, so for example, core supply, it's funny that you call it boxes. We used to call it the supply and demand. So here is a slightly dodgy consolidation area, but it is a 4-hour time frame, right? So supply demand states that you need a pretty good move away from it. And then you also need the prices to ideally stay away from it. Anytime you get a test that is pretty quick, that weakens the zone. I actually recently just did a supply demand lecture with my VIPs, and I don't know how deep you went down into the boxes, but there are actually 6 different conditions. Some are filters, some are odds enhancers that you need to have in place in order to have a good quality area. But that doesn't work on low time frames because there's a lot of noise. So even this one, it's a bit iffy, but because we had a good move away, you can say this is test number 1. So, okay, that weakens the zone somewhat. But ultimately, where is the other stopping point? Well, you had the start of that swing all the way up here. So that would be a natural swing rotation point to the opposite side. Obviously, you can't do these intraday because this is across 2 days, and for prop accounts, it's not a decent approach, and especially because there's a time constraint, but also let's now look at the lower time frames, which is where I think a lot of people go wrong with supply and demand. Even something like a 30-minute time frame. So let's have a look. Intraday, let's say you find a decent quality zone. I don't see one here. This is all gradual. It's not strong enough. Let's have a look at a 15-minute time frame. Let's maybe go back in time. We also rolled recently, so that's a bit iffy. All right, so if this was on the daily chart, imagine a daily chart. So here is, I suppose it's a bit messy. Again, it was rollover, so take it with a pinch of salt. But here is a decent quality looking area, right? So you have a little bit of consolidation. I would actually call this a drop-based drop because on a slightly larger time frame, it will look like that. But just for the sake of argument, let's just say that this was the swing point. On paper, it looks great, right? It turned around, very good, again, drop-based drop way of leaving the area, stays away from it for a while, comes back to it, and then if you go really granular to see how this played out, the supply and demand says that the highs should stay, right? That the highs shouldn't be broken, otherwise there is no supply there, right? But look at what happens. So it pops into it, this is a 15-minute time frame, pops into it, only mildly reacts, and then whoosh. But then what happens is that this new liquidity grab is actually a cause for them to take it into another rundown. So this is why I don't like looking at supply and demand in the traditional sense on low time frames, because you do have a decent high, right? But it gets smashed, and then they go. Why? Because there was another high, but then where does it end? You know, you then have another high here. So the way I look at it is to have the larger time frame supply and demand areas in my head or somewhere else on the chart. I have eidetic memory, so that does help with certain things. But then I will look at low time frames and expect prices to run through these perceived intraday highs and lows that are intraday supply and demand, but I just look at them in a different way. I look at them as potentials for liquidity grabs. So yeah. It's funny though that the newer traders now call them boxes. It is a supply and demand concept. And yes, it's been around for, I don't know, 100 years? It's the first thing that I used as a swing trader. So that is how I made my first 6 figures. Supply and demand on larger time frames, daily and 4 hours. All right, we're having trouble around COMEX value low again, so I shall close this because I really wanted to see an acceleration there. And right now we did not see that. We basically just crawled up to it and we're already falling below GEX1. Not time yet. So I will look for a deeper pullback, maybe to this 515 area. At that point we may have a neutral day type on our hands. And if we look at the profile just for like 3 seconds, let me just clean up the chart a little bit so I don't confuse you. If you look at the profile, it is very evenly distributed and it is D-shaped. This is not what you want to do or see if you want to go into a value acceptance on the basis of COMEX value. So you want to see a good move through it. So I'm going to speculate that they're going to run down into the Asia lows, then reverse it, and then we might have that longer term trade that has 2.5-3 R space, profit margin inherently, intrinsically inside of it. But that is the plan. Is gold good to trade on long time frames? So when gold goes nuts like this, I look at it as kind of like some kind of a stock that went absolutely insane, like Nvidia, and that is so high up that for me, longer time frame position trading gold should only be done through some kind of options strategy. Because once you're that high up, what are you going to do? So are you going to position trade it? Well, in that case, you're so high up that any kind of reward that you might get is going to be minuscule. But options, wherever you get involved, they will still have a similar risk profile regardless of the underlying price. So you can still have, you know, a very decent monthly option on gold, regardless of whether it's at 4,000, 2,000, or 10,000. It is still the same risk profile. If you can find a reason why you would enter into longs and then kind of position trade it that way, yeah, that's something I would definitely do. But outright futures trading gold at this time of the volatility and how gold is behaving intraday, you won't be able to hold on to any position trade unless you have a big account and you use an absolutely humongous stops. Because here's the thing, if I'm going to do a swing trade that I'm planning to last for a month, I cannot use 70 ticks, 100 ticks. I have to use twice the amount of the entire average daily range. That, my friends, is 3,000 ticks. 3,000 ticks. Even on one micro, that would mean $3,000 on one micro. That's the risk you're looking at. And on one mini, that would be 10 times that. Okay? So therein lies the problem with trying to outright trade, position trade, swing trade instruments that are super, super volatile. Because you don't want to be whipped out of your swing trade because gold decided to whip about 400 or 500 ticks in the span of 30 minutes. You need to desensitize the swing position to the intraday whipsaws down to a point where it's not harming you too much. And right now, to do that, you would need to risk $3,000 on one micro. So I don't know about you, but to me, that's too much risk. I don't want to swing trade things that are looking like that. But I can swing trade it through options, because options allow you to control risk through premiums, and especially long options, they obviously have the time decay in them, so the longer you hold it. But here's my little trick. So when I'm doing options trades, I'm pretty good at, obviously I do intraday trading, so I'm good at timing setups. Maybe I'll be off by about 2 hours, but eventually, you know, things happen as they should. And that ability means that I can place myself into a longer dated option, typically 30 days to 45 days if it's available. And then I will look for the major move to come in the first sort of 2 or 3 days from me initiating the options trade. And once I get that, I will typically take it off, because I'm not going to hold it. And the reason why is because the longer dated options don't suffer as much from time decay, as much as like 0 DTEs or 2 days to expiry, because it's further out. So the closer you get to the expiry, the more it erodes the profits on the longer option. But because you're basically just holding it for a couple of days or 3 days, it's not a problem. And yet you have all the upside and all the limited risk that comes with a very simple long option trade, because you just pay for the premiums. That's your max loss. So that's where my mind space is at the moment. Whenever I see something super volatile, there is still opportunity in chaos, but there are better ways to position yourself with less risk and still all the upside. So hopefully that makes sense. I know that a lot of you have tried options, you're not sure about it, and For me, it took a long time for me to kind of actually start getting into options. But I probably stayed away from them for about, I don't know, up until about 2017. And that's when I started sort of messing around with them, and I really liked it. So I'm not I don't do too many kind of spreads and stuff. Sometimes I do, but it's not my core way of looking at things. My way of looking at things is to find the reversal time. All right, let's do a punt trade here, or short. But I'm going to increase the stop here. Again, these are just trades that I wouldn't normally take. So just to make that perfectly clear. And I'm just, you know, taking in what's happening right now. We were not able to go above 520. That is GEX1. So I'm kind of trying to see if we can continue down towards the Asia low at some point. But it's very flat. We do have potential for a failed auction though, because we wicked above it. Then we tried to go back to it, and now they're failing. But VWAP is still supportive. That is definitely a dangerous thing here. However, if we, you know what, actually, let's just do a little failed auction core trade. So let's just do this. It's not the biggest trade, but 1-to-1. But if this is a failed auction, we should rotate to the highest probability target, which is the opposite side of value. Whether it extends it or not is a different story. But let's just see if we can get that little quick rotation. If we don't, we don't. It's fine, not a problem. And if I get a failed upside auction in and around value low after an extended run up during my time of day, that is actually a star setup for me. But this is the wrong time of day, so there's no time component. There is no time component. Is this a swing trade you're doing a copper? Obviously not. Obviously not. Swing trading copper for me is not really that prudent because it moves up and down too much. Doesn't really have a trend on a large time frame. So my very first requirement on copper for any sort of, well, anything actually, if I'm going to do a trending position, is to have a clean trend with no inside bars that keep overlapping and overlapping and overlapping and not really going into price discovery, right? So this is not a trending market. It's not a high quality trending market. This is a meh. And it's been like that for a while. Now, if we go back further in time, we go back in time to February 2024, you will see copper had much cleaner runs. So very few candles actually overlapping. Maybe you can do swings then, but compare that to now, this is all very, very painful. So you would need to spend quite a lot of time stressing in a swing. Now, on the other hand, if you look at something like platinum up until very recently was trending very nicely, and I would argue that these buying wicks are just giving us a little breather like they've done here and like we've done here before it kind of runs back up. This is a weekly chart, and then on the daily time frame a little bit more messier. So still would not be my good choice for any swings. But gold, this is a proper trend, right? And now we might have a downtrend. But one thing that I'm looking at, and this is something that we talked about before, these are the areas that I marked up a while back. So we have the possibility of, again, a reversal because we're still inside this form of demand here. So is it going to carry on down? And yesterday I was doing the VIP session with, joint with Hogue. Hogue is my friend, mentor. Just, you know, we've known each other for a long time now. And it was such a privilege to have him on. So we were talking about gold. And I said, do you think this is a change of sentiment? And then we were sort of just spitballing, you know, kind of ideas of where and when would it be time to buy this. And I I said, well, really, we have some areas all the way down around 36.90 because that would represent about a 15% drop from the high, right? So once we get to 37.35 and then all the way down into this former demand area reaccumulation that carried on, that will be my bargain hunting area. It will be like, yeah, this is time. It's time now. But even then, I might just do that through options. Maybe I'll look at some gold miners to initiate new investments. But yeah, I wouldn't do it in like intraday because it's too volatile. It's way too volatile. So yeah, something to keep note. So hopefully that gives you a little bit more of an idea of when swing trading is good. This not good. This me good. Yes, me likey. Yes. So trending markets and swings, they have to go hand in hand. If you don't have a swing and it's not, if you don't have a trending market and you try and swings, that gets painful quickly, right? Because you will be watching paint dry. Some of you can't wait for the trade to move over a 2-hour period, let alone 2 days and 2 weeks. Like imagine sitting in a trade for weeks on end and it's not doing anything. Can you do that? Probably not. I would say not for most of you. It would be too much, way too much. All right, so VWeb time. What do you want to do? What do you want to do? What are we going to do? We're going to bounce. We're going to melt. We have enough volume. But you never know. Are we going to go down to IB low? This is where the very, very small target is. And if it does, that'll be the end of the trade. Failure of price to advance past value low into yesterday's COMEX. That is what this was. Avi wants to know, do you still use IB for each session or just one IB for a whole day? What would that do? Initial balance is the first hour. It's not the entire day. I use the value area from the RTH, but that's the 70% of the distribution of the overall business. So where most of the price is spent time, that's the value area. Initial balance has always been the first hour of any active exchange. So we have London, we have Tokyo, we have, I suppose you can look at LME as a sort of a orientation as well. I certainly do, but I will look at them as more like overnight highs and lows. And then you have COMEX. So I use COMEX values, but sometimes I will use the London initial balance to find my orientation if it's this early. Why? Because I'm doing these streams. Do I have to do that? Ideally, if I want to find any sort of a setup, yes. Do I find bigger trades here? No. All of the bigger setups are later in the day. All of the bigger setups. I might see some of them start in Asia, but usually London and or COMEX will retest those, giving me an opportunity to get in on that bigger move from around about the same price point, because Asia will set the range on a lot of the days. And if the Asia range is large enough and London up until COMEX open, it doesn't really exit that, you have a pretty good probability of the price remaining inside that Asia session. This is very specific to the metals. It's not specific to energies. It's not specific to equities much. Sometimes if Asia ranges are bigger on equities, the same thing applies, but a lot of the days will be very quiet. Yesterday is not one of those days because we've had FOMC. That's an outlier that will push more juice into what? Asia range. But you can absolutely use them as reference points. If we're still inside Asia, look for highs and lows to see whether we're breaking them or not. If we're not breaking them, you can trade the rotation of Asia range to like your best ability, obviously. We have my watchdog, 7 Jerry Bear, kicking off. And if we're breaking outside of the Asia range, then you can look to see whether that is sustained, and then you have a potential for continuation. It's a very simple way of basic market structure. Everything else that I do here, that's all like fancy stuff that comes later. But the basic thing that I was always taught to do is to look at what the overnight did. It was like, all the meetings in all the prop firms that I've been, what did the overnight, where's the overnight high, where's the overnight low? That was like the point of contention every single morning. So yeah, it is an important price point. And then you just look for more situational awareness by adding a few more fancy things. Like, remember, you're looking at a combination of me tweaking, chopping, changing things over in 18 coming on to 19-year period. So it's not like I started yesterday and then suddenly I started using GEX levels and value areas and market profile and quantitative extremes and time of day and let's add this and let's add. It's just literally whenever I ran into a difficult period and my previous way of analysis did not make me aware of what's happening, I needed something else. So that's where I looked how to improve that. And then inevitably you end up chucking things that didn't work for you and keeping and adding things that do make sense to you. And we're all different. For some people, this will be too much. For others, it won't be enough. You have some ICT traders that have millions of lines on the chart. You have some profile traders that don't even look at charts. I can't do that. I have to see price. We're getting a little bit of a bounce from the VWAP area, but if the volume doesn't support the longs yet, so I need this volume bar to go above the 20 moving average. Otherwise, it's still a short, but it may not be. We'll see. Like I said, this is not a trade that I would take at this time of day. So we don't get like a quick move down. What's the time? Okay, it's not time. Then I may bail. Yeah, exactly. So social different says, me personally, I wouldn't risk 4,000 on micro contracts. That's the amount I would risk on normal contracts. Yeah, but if you risk 4,000 on one micro, that is only 400 ticks in gold. That's not even like, it's not even half of the ADR. Like right now, gold has like 1,300 ticks for the average daily range. So if you want to be in a swing position, you really want your stop to be able to absorb the entirety of the intraday range, and having the account size that is big enough so that that movement of 4,000 or whatever, or if you're going to trade 1 mini and still use my scaling, you would need a decent 6-figure account for that, closer to high 6 figures, because you would be getting to a point of risking 40 grand to be comfortable in 1 mini on that range. So it's a lot of risk. It's a lot of risk. It's like 1 mini, 40 grand risk. Do I really want to do that? No. I think there are better options out there, just personally. All right, so this little squiggle, the wobble at VWAP, so far failed to give us a volume bar that went above the moving average of the volume. But we'll still need like a 15-minute or a 30-minute time frame to collapse, to capitulate at VWAP before this is going to be a valid failed auction trade. Looks all right on a 15-minute chart, but I'm just still seeing these passive buyers sitting below the market. So here they are, 13 contracts, 518.85. Every time we dip there, they go, whoop, we buy it, whoop, we bought it, whoops, we bought it. So until they F off, we're not going to get. Try to keep it PG. Keep it PG. Keep it PG. So yeah, until they go away, we're not going to get the drop. We're going to wait for the drop. The likes seem low for the number of people watching. Yeah, everybody seems to hit the hearts on the the chat, which I've noticed. But guys, that is engagement, but it doesn't show up as actual likes. So for the likes, you need to like that thumbs up button underneath the actual video, and then we'll know. And don't hit it twice, because you hit it twice and then it takes it away. Don't take my likes away. I hate doing the audience interaction, I'm going to be honest. It's like Andre is so good at it. He says, click the like, click subscribe, TopstepTV, let's go. And I suck at that. I'm like so terrible. I even used to have a problem with signing off as well. So, you know, I start to sign off and then I remember something else. And I think I still do it. Like if I'm a little bit sleepy, I'm like, oh, this has been your trade. And by the way, I forgot to tell you. And anyways, that was all for today. It's like, Dee, are you signing off? Like, what are we doing here? And, you know, I'm trying to get better, but sometimes maybe I just need to like script something out for the audience interaction, because I really, really am not a natural at it at all. And then the whole trying to say it as well. It's not the easy. Click the like. Click, it's good. Click, like it's all up in your like palette. So I'm always struggling. But yeah, maybe something. I used to joke around that again, humor is my little coping mechanism. So I'll be like, caress the button, caress the like button, give it some love, and show it some attention, wine it and dine it, and for the subscription thing, when I first started doing like more engaging YouTube videos, I used to say, you know, put on the notifications, and then I can pop up wherever you are, you know, on your phone, in your bedroom, your man cave. But, you know, I don't know. It's just, don't want to be rehashing old jokes. Let's just put it that way. I always want to be doing new. Yeah, okay. So just saw that. Cool. All right, we've got some minutes left. We've got 15 minutes. So again, there goes the heart. Everybody's hitting the heart. Hit the thumbs up. Yeah. All right. Yeah, this is slow. It's slow for now. Come on. We need somebody to push them off the cliff. You know, it's just whoops. Did I push you? Or somebody to give him a kick up the bum as well. So just at this point, I just want this to move somewhere. Otherwise, we're just gonna be watching paint dry. I mean, you can see that the volume on the 15-minute chart is not even. Can you see that? Am I blocking that? Probably I'm blocking that. Hold on. Yeah. So on the 15-minute time frame, here's what I'm looking at. We really need. So look at Asia. So Asia has decent volume. And now we've got to London before LME. This is why metals, they're not the best option. But the closer we get to LME, this should start livening up. And then you will see the volume start to pick up. That is when we can expect smoother moves. Right now, I'm just... You can see it, right? It's not really that lively. And it's all down to volume. You know, price is nothing but an advertising mechanism of volume, to use Dalton's words, the ultimate legend. And, you know, I fully agree with that, because you need volume for movement. And yes, sometimes things can move on lower volume, but there's still some volume there. It's not like, oh, nobody's trading it and yet it's moving. Otherwise, the way that price action goes is there's one tick here, and then on a tick chart, you will see the next tick. Just tick wherever one person put an order. And then if the next one decides to put it lower, that's where it's going to jump. So in order to generate liquidity, we have to have multiple people, and this is where market makers come in, right? So they're the ones who generate liquidity. Market makers right now pretty much asleep on copper, but they might start waking up. All right, some life, little bit of life. And I mean, we can count the number of people here, right? Like, what is this? 2, 4, 8, 16. So maybe there's about, let's say we have 30 to 50 people at the moment who are maybe trading copper. Not enough. But yeah, so here is the VWAP again. The orientation, remember, for this failed auction trade potential, even though it's slow, is that we smash through VWAP and then we'll get our target. If that doesn't happen, somebody's still looking at VWAP and hugging it and going, I love you. You think that small candle filling passive orders? I think that buying wicks at points where we previously had, because I can see it on heat map, previously had orders between 1885 and 1820 now. Those will be passive orders. Why? Passive buyers. Why? Because they're waiting with a limit. These are limit orders. You can see them. So what is this? It's a passive buyer. They're waiting for 5, 18, 20 to come in before they buy it. Can't see any further because we only have 10 up and 10 down. But if I look at Bookmap, Rich says the annoying week when time change is not lined up because, oh, tell me about it, man. It just puts a wrench in the works completely. Yeah, so if I go back far enough in time, like when we were trading here, we had interest, yeah, at 1880, and then further out, because I can see it in heat map, the heat map. So 1830 was a point of interest. So why do I say that? Because heat map. This is where they reversed. So they tried it, and then from there on out, they went up. That's the first point of a wobble. And then the main interest, where we reversed for sure, was about 1750. So if we want to go really granular, that's surprisingly where this low is and where the initial balance low is as well. Right, some weakness around VWAP volume still not following. Come on, just a little drop towards the end of the stream. But yeah, that's kind of like the deal here. Anyways, since we're getting to the close to the end of the stream, I am going to take this, get some of my day back, and then wait for a little bit better. Yes, it might continue, it may not, but they are really kind of making a meal of it around VWAP, so I'm not going to wait until this reverses on me, because we have some lovelier, better areas at 515 that I would be more inclined to get involved with a lot less pain and more volume. Shay says, do you give a lot of importance to the 200 MA 15 minutes HG? No, I do not give importance to moving averages much unless we're on the daily chart. If we're hitting 200 daily moving average somewhere, that would make me perk up a lot more. But any kind of moving average you see on my chart, this one is a 16, but I do not look at it as anything else than like a timing tool. And how I use that is I use a very low time frame, I watch tape, and then sometimes I even use like range bars. We don't have range bars here, but I suppose tick charts might be. I don't like tick charts personally. I like time-based and movement-based candles that are not equal. Range bars are okay for certain things, but I would still prefer like something that doesn't look the same. So tick chart is sort of interesting because you have 100 ticks and then whatever the candle composition there is, it creates the bar. So it's sort of like, it still has the strength of movement inside it, because if you see this one just basically melted and then quickly reversed. So that gives me more insight. But then if you look at the tick chart, the volume all looks like the same, right? So it doesn't really give me enough information that way. So the way I would look at the moving averages that I have here would be if we're already in a trending market, and then I see that the price is starting to do this, and then it kind of keeps trouble above it, and every time they touch it, they kind of continue and continue and continue. But at some point, when you get too far away from it on such a large time frame, you will always get this reflexive bounce, at which point I will look at where that's coming from, and usually there's some sort of a good reference low on a slightly higher time frame. So yeah, for me, moving averages is just a timing tool intraday. As a level, I really want them to happen on the daily or somewhere. So yeah. Yeah, JJ, I'm the same. So he says I like using both tick and time transactions. Gives you volume info. I'm the same. I will look at both. So I have range bars on one chart. And I get it for some people that say, wow, Dee, how many charts do you want to look at? Well, all of them, really. Ideally, I have a 4-hour chart, 30-minute chart. And then I flip between range bars. I flip between tick charts sometimes, especially if we're like in a slower time period of the day. Because it can give you a little bit of a better indication of where the support and resistances are. And then I will look at a 2-minute chart, 5-minute, 15-minute, and 30. And I will flip between those, usually on the same chart. So if I have, let's say this one, I'm trying to smush everything on Topstep X here, but, obviously I have 5 screens to work with. So I will be constantly going, what's going on a 2-minute chart? Are we going above the 16-minute moving average? Are we staying below it? Are we smashing through VWAP or holding? Well, we're holding. Is there any volume? 5-minute chart. What are we doing? It's kind of like a sports commentator, right? Where is price? So it's right at VWAP. Still nothing really much. Volume is dropping. What is going on? I actually look at the 10-minute chart sometimes as well. Still some passive buyers stepping in. Volume still not following. Very flat. But is it a distribution that we can maybe keep going down? Maybe. But so far that's not been the case. And then I do the same cycle again. This is called the OODA loop. So observe, orient, decide, and act, or OODA loops, as Anne-Marie likes to call them, which is quite a fun name for it. So constantly looking at your price points and tracking how the price is developing through time. I don't know how people only trade with range bars, but I wouldn't be able to hold my very 4 or 5 hour long intraday swings without flipping between, let's say, 15 minutes. Because once I'm in, I then don't stare at a 2-minute chart. Otherwise, it's going to take me out, right? So I will then look at 15 minutes. I will look at 30 minutes. I will then look at 1 hour. I will then look at 4 hours. Then I will go and make my coffee or, get breakfast or something. Even though I don't really do breakfast. Coffee is breakfast. Coffee is life. But yeah, so I will constantly flip between different time frames, at least like 4 of them, to track how the price is looking across the board. And that helps me to get a pretty decent idea of what they're trying to do with it. And obviously I'm not perfect. I will make mistakes sometimes, and I have days where I'm just absolute wizard, and other days where it's like, that was a bit muppety. So in that regard, I maybe have less Muppet moments than most people, but they still happen. You can't ever completely get rid of Muppet moments. That's always a utopian dream. But yeah. All right, that is it. Oh, somebody. I'm not ignoring your comments. I'm trying to keep track of everything that's going on, man. But yeah, alien is spiritual. Alien. Am I reading alien there? I am. I am reading. Don't worry. So you're ruining the heat map because the heat you bring is distorting the heat map. Ha 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 ha. Yes. Very funny. Don't know what to say to that. Yeah. Topstep bringing the heat. Can we say that instead? And yeah. 39.52. What's that? That's gold. Yeah. I don't know what's going to happen on gold. It's all a bit confusing. I want to see how this month ends. Then we may have a little bit more. Because let's have a look at GC on the monthly. And ignore this. Because yeah, tomorrow, end of the month, right? How's it going to end? Well, big selling wick. But we've seen some of the big selling wicks that brought this. It was a long time ago. It was 2022. Has that happened recently? No. Any selling wicks recently were promptly taken out already very quickly. Weekly chart, certainly a bit precarious, but again, buying wicks. I want to see how the month ends. So here's the thing. If a month this week ends below this low, I would be thinking we might be in trouble with gold. And longs have quite a long way to fall before we get some bargain hunters. So yeah. And look on the daily. I mean, this is still very early. Yesterday looked the same. Yesterday looked like a bullish engulfing at one point. But this is why you don't use candles that have not closed the time period you're staring at. So let's see what happens. I'm not going to do anything in gold until it's massively lower down. But I would like to see how the day ends. Then if it's a strong bullish engulfing, bargain hunters have entered the building. But if not, I think we have some more downside. We'll know tonight, tomorrow, next week. Yeah, should be interesting. Now, on Monday, I am actually going to be trying to stream from a hotel room because I have to take my second young female for the... so I will be spending Sunday in London, and then Monday I just got a hotel room to... it's a dog-friendly hotel. It's beautiful. But yeah, so the doggo won't be with me because I'm dropping her off half an hour before the stream, and the hotel is not too far from my my actual vet. So I will see you then. Anyways, that's all I have for you today. So we tried one little tiny trade. We got a little bit of a buffer, tiny little buffer, and let's see what the day brings for the post FOMC aftermath. It's going to be exciting. I can't wait. This was the Euro Trade. I'm Market Stalker D, and I will see you next week. Have a great weekend, everyone.